Hello folks, this is Tony Drake from Drake & Associates with an educational economic update for May 2018. In this month's video, I'll discuss some of the major headlines that influenced markets in the last month. I'll also provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. Market volatility continued in April, but for the first time in months, all three domestic indices ended in positive territory. The Dow and the S&P 500 each gained 0.3% in a month, although both indices were still down overall in 2018. The Nasdaq added less than 0.1% but remained up 2.4% for the year. The start of the corporate earnings season was easily among the most important financial occurrences last month. By the end of the month, the majority of S&P 500 companies have released their first quarter earnings reports. Much of the news was positive as 79% of the companies exceeded expectations for their earnings. In fact, by some measures, this earnings season is the best on record. However, while corporate earnings results were strong, stock prices didn't experience large jumps in response. For companies that beat their expectations, the resulting stock increase was only on average 0.3%. Now, why wouldn't strong earnings cause large equity increases? This may have happened in part because investors saw a quick stock price increase as opportunities to sell for profit. But with trade wars, treasury yields, economic growth, and more, investors had a lot of topics on their minds. Let's briefly talk about how some of these topics affected the markets last month. The possibility of a trade war between the U.S. and China worried many investors in April. Early in the month, one poll showed that over a third of financial strategists believed that a trade war was the biggest threat to a stock rally. But by month's end, U.S. Treasury Secretary was planning a visit to China in hopes of preventing the trade tension from escalating further. Now, yields on a U.S. 10-year Treasury were also a topic that many investors were looking at last month. For the first time since 2014, yields rose above 3%. Now, this level is a psychological benchmark because rising above that rate can cause investors to leave riskier vehicles, such as equities. By April 27th, the yields had dropped back below 3%. That same day, we received the initial reading of first quarter gross domestic product. The economy experienced 2.3% annual growth between January and March of 2018, which was slower than the fourth quarter of last year, but faster than analysts expected. Looking back at April, both the economic data and the headline-driven news seemed to mimic the monthly performances that the indexes posted. There was a lot of action and talk, but the end result was just a little bit of a move, but seemingly in a positive direction. That's it for this month's Educational Economic Update. Please visit us at wealthwisconsin.com to learn about our upcoming workshops and be sure to tune in to our Retirement Ready show on AM 620 WTMJ Saturdays at 1 o'clock. Once again, this is Tony Drake from Drake & Associates signing off for the month of May 2018. Now please remember, nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We'll be happy to talk to you. Thanks.